Hi and welcome back to my channel. I know I've fallen behind, but I'm trying to get these videos out as quickly as possible. We've had a huge week in the stock market. I am increasing my weekly investments, and there's some big news with both Apple and Bitcoin, so make sure to stay tuned until the end of the video. First, I'd like to point out up $40 on the day. When we zoom out to the week, we can see up $198, which is huge, 2.5%, up 16.5% on the month. Over the last 3 months now, up 26%. On the past year now, up 19.34%. And all-time up 20.03%. Last week was the first time ever that I hit the $1,000 gains on my Robinhood portfolio. And I've shot past that due largely to Bitcoin, as we will talk about later in the video. My total investment now sits at $6,800. As I said, I purchased another $200 of stock last week. With that $200, I went ahead and purchased sold two shares of Four Corners Property Trust to start. The average price sold there was $22.91, so I received $45.82 of credit there. So I had about $250 to work with. I then purchased one more share of Microsoft, bringing my total to 3 shares. Purchased that one share at $201.75. Really like Microsoft. I think there's a lot of things to be positive about there. And last but certainly not least, I purchased $45 more Bitcoin, or 0.004685 Bitcoin. My new position is 0.18547 Bitcoin. And my average cost, or rather the cost on that last purchase, was $96.0473. So not a whole lot of movement in my portfolio. I did go ahead and get rid of Four Corners Property Trusts. I thought there was a lot of fluctuation in the real estate market. I already have some real estate positions, and of course I needed a little bit more wiggle room to purchase that last share of Microsoft. But like I said, huge news with Apple, so we'll get right into that. As we can see, CNBC says Apple just announced a stock split. Here's what that means for investors. During its third quarter earnings results on Thursday, Apple said the company's board of directors approved a 4-for-1 stock split. Stock splits are cosmetic, meaning they don't change anything about a company's underlying fundamentals. They can lead to renewed interest from smaller investors by making the shares, which are now cheaper, more accessible. And that's really the angle that I'm taking here. Of course, Apple was trading at over $300 the last time I checked, and this says Apple was trading for about $400 when this news broke. I think especially with the amount of money that I invest every week and the amount of money that most people are able to invest, a stock split like that can make Apple a lot more accessible. So here, it says the new price for holders will be around $100 when it begins trading on a split-adjusted basis on August 31st. Apple's move is not uncommon, and the company has enacted stock splits in the past. The tech giant's most recent split came in 2014, which enabled it for consideration and ultimately addition to the Dow Jones Industrial Average. The stock index is price-weighted, meaning the impact of a company's change in share price is determined by how much the shares trade for. Apple is currently the highest priced stock in the index, which may have influenced the company's decision to split its shares. Of course, I'm not super familiar with exactly how that works on the business end. That being said, it is big news for me because I'm able to invest, or really am more capable of investing at that $100 price range. So it's definitely something to be interested in. Here they said during the tech bubble, for instance, a number of companies enacted stock splits, which fueled rampant speculation and drove up shares without the earnings growth to back up the price. I think this could potentially be happening. As I talk about every week, I'm not entirely concerned with how the market's doing in the short run. I think most people agree the stock market's going to be hit even harder now in the second half of the year. But I'm young, I have a long-term geared portfolio, and I'm not entirely concerned with that, especially because now could be a good time to buy, or rather when the stocks dip, it could be a good time to buy. So my strategy is to continue purchasing regardless of what happens in the market in the short term. Warren Buffett's Berkshire Hathaway has famously never split the price of its main A shares, which currently trade around $291,000. I think most people think that the stock would sell for more money split. We wouldn't necessarily think that was advisable in the first place, he said at the company's annual meeting in 1994. In the second place, we don't think it would be necessarily true over a period of time. We think our stock is more likely to be rationally priced over time, following the present policies than if we were to split it in some major way. We don't think the average price would necessarily be higher. We think that the volatility would probably be somewhat greater, and we see no way that volatility helps our shareholders as a group. Buffett has, however, split the price of Berkshire B shares. Now, for those who aren't aware, the B shares are trading for, I think, exactly 1/100th of the A shares, and the point there is that, as he said, it's a little bit more volatile, but The goal is so that people can invest with much smaller amounts of money. There are not a whole lot of people that have $291,000 sitting around that they can invest in the stock market. I think that Apple could be an interesting buy, and I will definitely be considering it in the following weeks, so let me know what you think. And once again, I want to remind you that if you like this video, make sure to like the video itself, subscribe to the channel, and comment down below what you want to see me make next. Now onto my stocks. We will talk about Vivint Solar pretty much every week until this merger with Sunrun goes through. There's a lot to talk about here and a lot of fluctuation in the price. So down a little bit from last week, market value is now $1,007.50. Average cost stayed the same, didn't make any moves there. Total return is now down to $670.54, or 199%. On the week, it is down 13%, but I'm not super concerned. On the month, up 105. Over the last 3 months, up 235. Over the last year, up 146. And 5 years, up 28.43%. Vivint Solar is reporting their earnings very soon. I think that this could hurt their stock price. To be more realistic, I think it will hurt their stock price because they have not been able to consistently make money. But the stock market's been crazy lately. I'm very happy with my position here, and I think that once that merger with Sunrun goes through, it could be a good position for me to hold. I think I'm just going to stay put with this for now. And here we have VTI, or Vanguard Total Stock Market ETF. I like to show this one every once in a while because, of course, it tracks the stock market better than anything else in my portfolio. My total return is now up $57, or 9.5%. On the week, it's up 1.8%. On the month, up 5.5%. 3 months, up 15.8%. Over the last year, only up 8%. It's very similar to the stock market. We saw slow growth, or really it was fast growth, but compared to that extremely fast drop-off, not looking great, and then strong growth since then. So over the past 5 years now, up 54.82%. I always talk about the quarterly dividend here being huge, as well as the fact that it's able to track really a large part of the stock market, which means it's not going to be the greatest holding in my portfolio, but there's certainly less volatility than an individual stock. I now have 4 shares here, meaning that I have a market value of $663, and I think I will continue to purchase VTI if possible. That $165 is a little bit high towards my price range of $150 to $200 a week. But like I said, I will go out of my way to purchase this one. Next up, we have Coca-Cola, a stock that I'm not sure exactly what to do with. 76% buy rating now on Robinhood. They had massive drop-offs. So if we zoom out to the month, we can see they're up 5%, 3 months up 3.7%, and on the last year down 10%, peaking here in February at $60. Over the past 5 years now, only up 19%. But of course, Dividend King here, I have 8 shares, meaning that dividend is extremely strong. I believe the dividend is 41 cents a quarter right now, meaning it will be at least 42 cents next year. They've done that 55 years in a row. Their last earnings call was not very good. However, a lot of industry experts felt that it could have been a lot worse. And because of the global shutdowns as well as the more local shutdowns, they think the worst is pretty much over for Coca-Cola, and they should be able to recover fairly well, especially because they've now spread things out. I read that about 20 years ago, 90% of their earnings and their makeup was soft drinks specifically. That's now down to about 70%, and they're looking to diversify that further. Pfizer's been a stock in my portfolio that I have not talked about a whole lot. I think I'm going to look into purchasing some more Pfizer shares here soon. They, of course, are working on a coronavirus vaccine. Will that work out? I don't know. But if it does, that could be a huge thing for Pfizer. So up about 2% on the week. On the month, up 14%. Over the past 3 months, up 2%. 0.16% on the year, and 13.17% over the past 5 years. Total return is down $8 here, but as we can see over the last year, they have struggled, so that's not the end of the world. It is one of the smaller holdings in my portfolio, only represents about $155, but let me know, should I sit on this one? Should I purchase more shares? Should I sell? Should I look at another pharmaceutical company? Let me know what you think. The last stock for today is DraftKings. This is the newest holding in my portfolio, trading for $35.37. Purchased this 2 weeks ago. The total return is now down $3, which isn't great, but of course it's very soon, and I only have the 1 share. 83% buy rating. On the month, up 3%. Over the past 3 months, up 84%. And since that IPO less than a year ago, up 262%. DraftKings, I think, as I've mentioned previously, can be successful because of the increased legality of sports betting, especially with sports now coming back. This could be a huge one. I also have Penn National Gaming in my portfolio, but I think the combination of those two should be good. Maybe not, but I like what both of them are doing right now. No dividend on either one, but that's not a huge deal for me at the moment. Finally, we're on to Bitcoin, which has absolutely exploded this week. My total return is now up $351.04, or 20.65%. Now makes up slightly over 1/4 of my portfolio at 25.12%. My average cost is slowly creeping upward, 91.6609. My quantity, as I mentioned before, is 0.18547 Bitcoin, or about 18.5% of one single Bitcoin. My goal would be 1/4 of a Bitcoin by the end of this year, and hopefully half of a Bitcoin by the time it peaks next year. That's very optimistic, but I think it's definitely doable. So on the day, not very much growth, up 0.36%, but up 15% on the week. Over the past month, now up 20%. Over the past 3 months, up 28%. Over the past year, up 15%. And over the past 5 years, up 3,700%. If you'd like to see more Bitcoin content, or at least some more articles describing what's going on with Bitcoin, let me know. I would be happy to do that. I really just want to know what people want to see. Thanks for watching till the end of the video. I'll be back with another one next week. Thanks.